You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi, it's Victor here from ForeShoreMarkets.com. In today's video, we're going to be looking at advanced risk management strategies. Okay, these are concepts I learned based on my personal experience. Okay, years and years and years of having price hit your stop loss. Okay, having price hit your stop loss, and let me show you a few practical examples of what usually happens in the market. Okay, so example in this particular chart, pound dollar. I'm on the 4-hour chart. Okay, so you have done your analysis, and probably you have done your analysis and you feel this is a good support. Let's see, where are my lines now? Okay, so you feel this is a good support and you have done your analysis. Okay, maybe anywhere here, after you saw this pin bar, after the double bottom, you felt, okay, I could take the risk, I could buy on this candle or on this candle here as confirmation. And then you put your stop loss. Of course, they are taught to put your stop loss below support, and so you put your stop loss somewhere. Maybe most traders will put their stop loss here. Okay, a few traders will take it down a bit. Okay, and of course, if you are a trader already, you would have experienced this so many times. Okay, it happens especially on the lower time frame, 5 minutes, 15 minutes. You place your trade, you place your stop loss. Okay, and then price comes down and hits your stop loss. Okay, and then after hitting your stop loss, it goes back big, very big move in your direction. So how many pips was that? From, let's say you entered here, 1.2356. okay, and the price went as high as 1.28, 450 pips plus. Okay, 450 pips plus. Very, 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 very big move, very, very sweet move. Okay, here's what happens when you're trading with a fixed stop loss. Okay, the big players in the market, the very, very big players, the institutional bankers, Goldman Sachs, the UBS, the Deutsche Banks, and all of them, even the brokers, okay, the big brokers can see where your stop losses are. They can see where there's a concentration of stop losses. Okay, so when they see where there's a concentration of stop losses, they can now target those areas, because for the big boys to make money, someone has to lose. Okay, for the big boys to make money, someone has to lose. So when they can see all your stop losses and say, okay, everyone stops, most retail traders stop on pound dollar are at, say, 1.2204. You will see them you see them moving the price down there to flush out those stop losses, okay, before taking it in that direction. And that is one secret I discovered. This is one secret I discovered in this market. And after I discovered this secret, my trading changed for good. Because if you want to be a profitable trader, you need to understand you need to think the way these guys are thinking. So if everybody sees that this point is support, right, and everybody is thinking that, okay, I will buy from this support, what do you think the big boys are going to do? The opposite of that. Okay, so you need to learn to think like the big boys, because they have to fool us to make money. Okay, so don't get fooled. Yeah, I've taught you technical analysis. Generally, that's what they teach us. Most of the technical analysis that they teach us is for us to lose money. Okay, just a secret I'm sharing with you. So you have to learn to think you have to learn to know how retail traders think, and think opposite of what the way retail traders think. Okay, and so that's where I got this concept of also advanced risk management. Okay, so let's look at the concept of advanced risk management. So I'm on my whiteboard now. Okay, we were taught, okay, the way I taught you is the way I was taught is the way I taught you. What I learned online, all of the information online. Okay, yet people are still losing money. Okay, that means there's something wrong somewhere. Okay, so we were taught that if you put your stop loss as 20 pips, okay, that your take profit, try and make your take profit more than your stop loss, maybe 80 pips or 60 pips or 40 pips. Yes, all well and good. This is a perfect risk management strategy. Okay, but the challenge is that it works if you can manage it, if you can stick to it. But the challenge is that the human mind, okay, the human mind works with emotions. Okay, it's emotional. Okay, so for you to make this work, you need to be like a robot. It is better you program a robot with your strategy to trade for you. Put your stop loss and everything to trade for you, because if you're going to trade this by yourself, it's really very, very difficult to apply it. Why? Because most times your stop loss is going to be hit and you're going to get frustrated. Okay, most times your stop loss is going to be hit and you're going to get frustrated. Not because your analysis was not right. Okay, you did the perfect analysis, you got the direction right. Okay, but when the big players look at where all the stop losses are, okay, they can easily flush you out of the market. Okay, and that is why for me, I don't try to be right the first time. Okay, I do not try to be right the first time. So I can enter a first position somewhere. I can enter my first position somewhere at support. I always buy at support. I can enter my first position at support, and I don't use fixed stop loss. Okay, I use what you call dynamic stop loss. It's advanced stuff. When you get into my advanced training, you can get access to that. So I divide my positions into more than one, right? Preparing your mind that the big boys are going to try to flush you out. Okay, so instead of me having my stop loss below here, I rather have my first entry there, and then if they try to manipulate the market going down, I give enough gap, okay, to put the second position, and I give another enough gap to put the third position. You can either use 2 positions or 3 positions, but guess what? This is advanced risk management. Don't start trading with this strategy. You need to do it on demo, master it, and see how you can make it work. That is why you have a demo account. Okay, so now I've found that this doesn't work for me, and that is me. If it works for you, all well and good, but I'm yet to see one single trader that has made this work for him. Okay, so this is a risk reward. This is a risk reward of 4 to 1. Okay, so this is what you call, this is the normal way. Okay, but there's something called negative risk reward trading. Okay, and so from experience, you find out that for you to get this right, stop loss small, take profit very large, because the market does not trend all the time. The market does not move big all the time. Sometimes it's moving, sometimes it's going up and down, sideways market. You know, it keeps changing such that your trading strategy, if you're not smart and you're not dynamic with your trading strategy, they will always get you. Okay, so negative risk reward strategy, for me, this is extremely hard, and I've found that most people cannot make this work. Okay, because we are just human beings. Okay, for you to make this work, you need to be almost perfect in your analysis and your discipline. Okay, so what negative risk reward is comes in the sense of where you can use stop loss of 100 pips, okay, and take profit of 30 pips. This is what scalpers and day traders use. Okay, this is what scalpers mostly use. Now, but for you to make this work, remember our last calculation where we put everything together to calculate your no, not where we put everything. Our last calculation on where we compared the win-loss ratio and the risk-reward ratio. Okay, so for you to make this work, okay, then your win-loss ratio has to be high. Okay, your win-loss ratio has to be high. Okay, for this to work, your win-loss ratio can be average or equal. For this to work, your win-loss ratio can be 5 to 5. Okay, your win-loss ratio can even be 3 to 7. 3 to 7, you will still make a profit. 3 times for profit, 3 times 80 for loss, 7 times 20. Okay, that is what? 160, 140. You still make a net profit of 20. Okay, so even when you win only 3 out of 10 trades, if your risk reward is high, the profit, one single win will cover for over 4 losses, and it will still leave you in profit at the end. Okay, but if you're so with this, out of every say so out of every 10 trades, you can win, we try to win maybe 7, 8. Let's say 7. Let's see how it goes. 7, you win 7, lose 3. Okay, this is when your stop loss is far greater. For each trade, your stop loss is bigger than your take profit, but your strategy has a higher hit rate, meaning that it makes more wins than losses. And this is the kind of strategy that scalpers use, because if you say you want to take 10 pips profit and you want to use 5 pips stop loss, your stop loss is going to be hit. Even 10 pips stop loss, your stop loss is going to be hit very, very fast. Okay, so let's see. So if you are winning 7, this is too high. Let me make it lower. Let's say 60. 60 is fine. Okay, 60 times 7, 420. 60 times 30 times 7, 210. Okay, cool. So sometimes this can go as high as 8 wins, 2 losses. Okay, so why are we doing this? Because most times we know that they will try to flush you out, hit your stop loss. Okay, and so let's see. So stop loss 60 pips, 60 pips times 3 gives you 180. Then 70 pips times 3 times 30 gives you 210. You have a net of 30 there. And when it goes higher, 8 wins times 30 gives you 240. 2 times 60 gives you 120. Okay, this gives you a net of 120. Most times this can as well okay, thank God it came back. This can as well be 50. Okay, so it's all left for you to know, to trade for a period of time, 3 months, 6 months. Okay, you keep your records of your profit and your loss. Okay, and at the end of 3 months you start collating your numbers. You check your win-loss ratio, you check your risk-reward ratio, average risk-reward ratio, average win-loss ratio, and then you can come to the go do your calculation and see if you have an edge. Okay, I showed you how to calculate that edge in the, I think it was the last video. Okay, so this is the concept. This is advanced risk management. This is what I use. Okay, so I don't use a fixed stop loss. I can place first position, second position, okay, and I watch it. When I feel like, okay, this is not going my way, then I can close the both positions. Okay, sometimes the second position will cover for the profit from the second position, will cover for the loss on the first position, and still leave you with profit. So that's my own dynamic way of doing my own risk management. Of course, if you join my advanced training, you get full details about this concept. All right, and I'll also be sharing part of it practically when I'm sharing some trades on YouTube. Okay, so that's basically the concept of advanced risk management. It's not most of the theory that you are taught in technical analysis and in trainings. Okay, they won't work in a textbook format. They won't work like, okay, double top, double bottom, bam. No, you have to find a way. You have to find your own way, okay, to make it work. Find your own way, understand how the big boys think, okay, find your own way to read the market, and don't just fall for, traps that are set in the market. Okay, so I hope you've learned something new in this video. Okay, excuse me. If you like the video, click the like button. Okay, and if this is your first time watching this video, our videos, or you are yet to subscribe to our channel, please click the subscribe button, click the bell to the right of subscribe button, and click all notifications so you can get notified whenever we upload a new video. So I'll see you in the next video. Cheers. I think basically this brings us almost to the end of our basic course. Okay, the last thing we're going to look at is trading psychology. Okay, your mindset, how do you discipline yourself, how do you develop a trading plan, and all of that. Okay, so I'll see you in the next video. Cheers.